Good afternoon, everybody. I think we are live. Let me know if everything is working correctly. I've had some trouble with my network over the course of the last couple of days, so it seems to be good. Like it's sending the data through well enough. But if it isn't and if it's lagging, let me know. But for now, good evening or good afternoon, everybody, and welcome back to the channel. Welcome to a new live stream because we have some important data coming out. We'll cover the data together. We'll talk about what it means for the markets. It's always like the data that we're getting is the non-farm payrolls and unemployment rates. And the thing is that this is coming out at 1:30 UTC, right? So what that means is that it's 1 hour before the NYO. So very often what you see is when you have such major news coming out at this specific time is that you get an initial reaction and then you get the real reaction when the NYO starts, right? So when the US session starts after the NYO, and then sometimes that can be a very whipsaw move, right? So that, for example, after the news, let me delete these ugly drawings right here, that after the news we first spike down, and that after the NYO, all of a sudden we rally, right? Because data like this, like unemployment rates and non-farm payrolls, it can really be interpreted in both ways, especially given the poor jobs data that we've had over the course of the last week. Obviously, last week we had job openings, we had ADP employment data, we have initial jobless claims, all showing signs of tension in the job market. So if we see that again, you could say, okay, that increases the probability of rate cuts. Or you could say, oh, but then it becomes more likely we're going to get into a recession, right? So both data points can be bullish or bearish. If it's higher than expected, it can be bullish or bearish. If it's lower than expected, same thing. But let me quickly send out that we are live, because I have not done that so far. And that is important, guys. How's everyone doing, by the way? The markets right now are obviously not amazing, but it's a little bit double, because ultimately I do still think that when we're talking about the dump, for example, last week and the subsequent price action, I mean, obviously, or at least I think it's boring, but it's not necessarily that bad. And I think the price action last week was also quite predictable. So it was actually, I think a lot of people were able to save on some losses, which matters a lot as well, I think. Okay, let me quickly send it everywhere, and then we're good to go. And then I'll also check out who is with us today, because the market is cooling down a little bit. So only the real hardcore traders and investors are still with us, I think. Only the real core, the real hooligan group we have with us. Okay, let me quickly, this is the last one. There we go, and we are good to go. Data coming out in a little bit more than 6 minutes. I suppose everything is still working correctly. At least from my end, it is showing that. So welcome to the stream, everybody. Marcus, user, Raghuendra, Matic, Click, welcome. VJ, welcome to the stream. KML and W, Rodrigo, Euroday, Lily, welcome to the stream. Brai Broiki, welcome to the stream. Raika, welcome. Hank, welcome everybody. Yeah, so welcome to the stream, everybody. I hope you're all having a decent week at least. Can I adjust the camera slightly here? It would be better that way. Yeah, okay. So, Matic, certainly, right? And you can watch all my videos. You have the time for that. No, but okay, so when we're talking about the data, look, the one thing I think we want to avoid is unemployment rates being higher than expected. Okay, very often when the unemployment rate is higher than expected, that causes recession fears. And on the one hand, we do want the job market in the United States. I mean, obviously, like, do we really want that? No, but we're talking from a purely, we're talking as if we have no emotions, right? We have no emotions, and the only thing that matters is that the financial market does well, which obviously that's not the real world. But I think that's what we have to do to create some value here. But based on that, we want less jobs in the United States. We want pressure on the jobs market there. because that incentivizes the Federal Reserve to cut rates. And that is what we want. That's good for financial markets. And therefore, presumably that's also good for the crypto markets, although honestly, we have not necessarily seen that in the last couple of months, where the financial markets have actually held on relatively well, but the crypto markets slid down lower, right? But ultimately, that's what you want. But you also don't want too much, okay? So you want pressure on the jobs market in the United States, because that's ultimately still the main economy that matters for financial markets and for crypto. But you don't want it too much. So what I would propose as the best outcome is if unemployment rate is as expected, lower than expected, and that's the strange thing, is also not good, but as expected, and that non-farm payrolls, where at this point of time the consensus is that is going to increase, those should be slightly lower than expected. I think that is the best data that we can get for the financial markets. And like I said, I mean, that's the best data long term. Short term, that can still cause bearish volatility, or at least volatility to the downside as well. But we'll manage that. And I think, you know, if we get if that's the result, then I think overall we can actually target some longs on Bitcoin as well. But we will see. Dual investment. What do you mean? Lil Nas, doing good, man. How are you? Underwater Marvels, welcome to the stream. No, welcome. I would disagree. I think there is a way into the upsides. I think if you look at the 12-hour time frame here for Bitcoin, I think there's a lot of gaps to the upside. And if you go back in time and you see something like this, where we have 4 gaps to the upside, it has rarely happened that those are not filled. So I think it's actually more likely here short term that we see some bearish pressure, rather than a push down lower, unless we get some very bad news, right? I mean, if the volatility index spikes again, then we can push down lower. But even then, I would say that's an opportunity rather than a reason to be fearful. Maruti, I'll try my best, but unfortunately, I cannot do everything about it. Hopefully you enjoyed the quiet, but we're back again. I don't know. I don't know if Binance, Raghavendra, so I'm not sure what it is. But if it's given you, 351% in 7 hours, I assume that's APY. I would say that there's a hidden risk in there, so be careful with that. Okay, a couple more minutes. Before it comes out. Volatility index relatively stable. Equity is also relatively stable. Rodrigo, I don't think so. But obviously, like I said, if we get bad news, then we can push down lower. But for now, I think the local bottom at 60,000 is going to hold. Okay, 35 seconds. 35 seconds. And do I think it's a Thunder Daddy? Do I think it's a good spot to buy good altcoin projects? Yes, but I think good altcoin projects are very rare. And I would say those coins like Link, Solana, and BNB, like those definitely do, or those definitely are in that category. But ultimately, I would not be certain about buying a lot of those. Starting to accumulate those, it's fine. But buying a lot of that at these prices, at these valuations, I don't know. Okay, last couple of seconds. 3, 2, 1, and we are going to see what happens. We'll take a look at the order flow straight after as well. At this point of time, Bitcoin seems to be moving into the upside, but we don't have the data yet. No, it's just incredibly volatile. Can we please get the data here? I mean, the market so far, there's a little bit of bullish momentum coming into the price, actually. Not a whole lot. Can we get the data? Non-farm payrolls, wow, way higher than expected. Okay. Look at this, non-farm payrolls, 130,000, 60. It's almost double what they expected. So I would assume that the unemployment rate lower than expected. Okay, well, that is a very, very interesting result. And that is, I would say that's bearish. Because at this point of time, it seems most likely that we are going to get a rate cut before June in the United States. And this data does not make that more likely. It makes it less likely, right? But this is also quite strange, as in that most of the jobs data that we had over the course of the last couple of weeks was actually quite tight. And then right now the unemployment rate is lower than expected. Non-farm payrolls much higher than expected. Participation rate also higher than expected. That's good. Average hourly earnings also up. Unemployment rate U6 also much lower than expected. I mean, this is not bad news, as in it's this is the double part, but it's not bad news, as in it does decrease the fear of a recession in the United States. But ultimately, it's also not good news, because it also decreases the probability of a rate cut in March. And that probability was actually on the rise in the last week. The probability of that has doubled. So we'll see. Carlos, it's definitely not a nothing burger. And Raika, yeah, I mean, it's not a recession. I mean, I'm kind of, the question now is what matters more, right? Do we want more rate cuts? Or do we just not want a recession? And it seems like the market at this point of time is telling us that this data is bullish, or at least it's you know, more bullish than bearish, because it's double, of course. Thunder Daddy, 100%. It's a double-edged sword. But ultimately, the one person or the one entity that does not lie to you is the markets, and it's the price. And the volume that we are seeing right now since the news is extremely high. We've seen $590 million in volume in the last 2 minutes, which is more than the entire 30 minutes before. And over the course of today, we've had one candle of over $1 billion in volume, or over the course of the last couple of hours. And now we are getting very close to that. Yeah, no, honestly, it seems to be good. Market is reacting to it well. Raika, I agree. I think this is actually good data, or at least it seems like the market is deeming it good data. Now, like I said, this is the initial reaction, right? But the financial markets in the US are not open yet. They're opening in 57 minutes. So that is when we will still see volatility, and that volatility can be both ways, right? Because this news can be interpreted in two directions. You could also say this is bearish, but since we only really expected 2 rate cuts for the entirety of 2026, which you can see right here, like, does it really matter? This one data point with the fears of recession last week. I think it matters more that those fears have calmed down, and the probability is still there. Probability is still there that we're going to get 2 rate cuts. I mean, Friday we're live again, just so you know, and then we're going to get CPI and inflation rate data. And if the CPI and inflation drops down, then that is still a reason good enough to cut the rates, and then we will still see 2 rate cuts in 2026, but at least we will not have a recession then. So pretty good. I mean, it's also not a major move. I mean, if you look at the 4-hour time frame for Bitcoin here, it's not incredible. You can see that some altcoins are doing a bit better. Layer 0 is doing quite good. Hype is doing quite good. Plasma or XPL is doing is relatively bullish here. So far so good. Can this be a fake out, Daniel? I mean, it could be, but what are we faking out above? Right? I mean, ultimately, this is just some bullish pressure. It's low volume bullish pressure, but it is bullish pressure, and ultimately, like, can it be some sort of a trap? Yes, but it's not really trapping price action, right? I mean, this is a trap, right? So what we had earlier this morning is that you have a lot of shorts piling in at the bottom of a candle. So that's a trap, right? Because then those shorts are trapped. and you get a strong move into the upsides, and then all of those shorts have to exit their positions. And now, I mean, you can see that there are some longs here trapped at the top of the candle, but we also have quite a lot of longs right here, and there also seems to be quite a lot of spot buying coming in, because initially we moved up with barely any longs coming in. So it's not necessarily a trap. I mean, I do think, I mean, NFP days, right, so non-farm payroll days are certainly volatile, right? So I do still think with the US session coming in, I do still think we'll see volatility, but a trap, not necessarily. I actually do think that this data is not so bad, or at least this data will not cause us to push down lower than our local lows, right? So we still have, if we look at Bitcoin right here, we still have those gaps into the downside. So we still have that fair value gap and that naked point of control combo right here around 65,000, and we still have that single print right here at 63,000. Especially if we get some bad news, like if we get some bad headlines, we can still push down into those, especially given the volatility that will occur when the NYO happens. But I do think we'll find support there, and I do think we'll hold that, which on the lower time frames you'd say, okay, well, what does it matter? Those areas are very far apart from one another. But on the higher time frames that matters, right? Because if this, I mean, and obviously, like if we get some geopolitical escalation, things change, right? And if the data on Friday comes out bearish, things can change. But as it stands right now, if it is most likely, which I think, right, that's what I'm arguing based on this data, but also based on the price action we've seen before. But if it's most likely that that level between 65,000 and 63,000 holds, right, so that we actually have found a strong support level for Bitcoin here, then it also becomes significantly more likely that at some point of time, and I'm not going to tell you when, because I don't know, okay, but at some point of time, we're going to fill some of those gaps into the upside. I mean, may I remind you, if you look at the past, right, and if you look at all the times that we started to push down or we started to pull up, and we left gaps into the upside, for example, right here, right, so here it's in the other direction, but still it does matter. At the end of June right here, we started to gain quite a lot of momentum. We left a lot of gaps here to the downside, and eventually those did get filled, right? I mean, for Bitcoin, it took about a month, a little bit more even, and it took even longer to fill the other one. But that's not bad. I mean, if we can invert the chart right now and say that this is the bottom, and we have to bottom and consolidate like this, then that's fine. I mean, I'm fine with Bitcoin consolidating here at the current bottom. And for now, given this news, I don't see a reason why we would drop down lower. So I don't think necessarily we're going to rally based on this news, although I'm open for it. But I don't necessarily think that we're going to rally based on this news, but I do think we'll hold the bottoms. So be prepared for that volatility. Carlos, they're amazing. so be prepared for that volatility, especially that volatility into the downside. I mean, like I said, I mean, there's a realistic case to be made that says that this news that we just had, for those of you tuning in a little bit later, the unemployment rate was lower than expected, and non-farm payrolls were much higher than expected, which means that the job market, at least with this data, right? I mean, there's a lot of data we can look at for it. But the job market at this point of time in the United States seems quite healthy, and there doesn't seem to be a lot of pressure on that, which is a good thing, because last week, and generally around the markets, we've heard the R word, right? The recession word, the hard R. And so the fact that this data comes in and goes against that relieves that pressure and that relieves those fears. But it's only relatively bullish because we had those fears, okay? Because generally, we want some pressure on the jobs market, just not too much. Okay, but the fact that you can see it in both lights, right? You can see this as something good, you can see this as something bad. That means that when we open in 50 minutes with the United States financial markets, that will cause volatility. And that's also why I still think we can test some of the levels into the downside. But even if you think this is bearish, this is not bearish enough, I think at least, that we're going to push down lower. So ultimately, bearish pressure, I do still think is quite likely, but I think we'll hold support generally. And I think we can actually continue to find a bottom right here. I mean, ultimately, if you look at the data, if you look at the open interest, which is still capitulating, if you look at the funding rates, which are still negative, if you look at the Coinbase Bitcoin premium, that is still in a discount right now, but it's getting closer towards towards a premium. Those are all good bottom indications, right? So you should not forget about that either. But those are my thoughts generally. Most of altcoins are just moving alongside with that. Zero is still very strong. Definitely a coin to watch, guys, if we can break out here. So keep that on your watch list. But I think that's everything you need to know. 70K, Rudrak, I don't know. It's possible. It's more likely we'll go to 70,000 than to 60,000, I think. RXTR, this is, and you can see that there are some long strapped here. This is a footprint chart. It's an aggregated volume footprint. Yeah, Nadir, I agree. 64,500 is very likely. What do I think about gold, basically? XAUT, South. I think gold is going to consolidate for a bit. But for 2025, I'm still bullish on gold. Okay, that's it for now, everybody. We're back live streaming on Friday. Friday, we have inflation rate and CPI data, which with this data coming out has become even more important, because if we, and this is a little bit of a dream for me, okay? But if this is the data, right? So if we actually have lower than expected unemployment rate, and the CPI and inflation rate data on Friday is lower than expected as well, that would be very bullish for the financial markets. So that's something to be excited about, for that possibility. But that's it for now. We're going to cut off the stream. I'll make some new videos. I'll be back with the middle of the day market update, of course, in about an hour and a half as well. So keep an eye on the channel. But for now, that is what I think you need to know. Once more, unemployment rate is lower than expected. Non-farm payrolls and non-farm payrolls private are higher than expected. As it stands right now, that is seen as a relief of recession fears and therefore relatively bullish. But with the NYO, we can expect volatility. And I still do think that downwards volatility is most likely. So be aware of that. Dylan, last thing. If you want my opinion on Solana, I made a full video on that this morning. So I would greatly recommend you to check that out. There's no way I could tell you everything I think about Solana in here. So that video is better. But that's it for now. Thank you for watching, everybody. I'll see you on my next videos. Take care. Stay safe in these markets, of course. It's a tough market to survive in.